Welcome to our Crypto News in 10, a daily podcast bringing you the latest news about crypto in under 10 minutes. Here's your quick guided tour for Friday, December 26, 2025. A real-time security scare at a major self-custody wallet. Russia's biggest bank edging toward crypto-collateral lending. And a holiday market holding pattern with ETF flows still a headwind. We'll also zoom out to the NFT tape. Spoiler, it's at the year's lows. And wrap with sentiment and the key levels into the final trading days of the year. Let's start with the one item you may need to act on immediately if it affects you. Trust Wallet confirmed a security incident in its Chrome browser extension, specifically version 2.68, after reports of unauthorized drains began surfacing on Christmas Day. The team urged users to disable that build and upgrade to version 2.69 via the official Chrome web store. Early tallies put losses above $6 million, with on-chain investigators, including ZachXBT, tracing funds across Bitcoin, EVM chains, and Solana. Importantly, Trust Wallet says mobile-only users and other extension versions are not impacted. In a separate update, Binance founder Changpeng Zhao, whose company owns Trust Wallet, said roughly $7 million were affected, and that Trust Wallet will cover user losses while the team investigates how a compromised update was pushed. If you or a friend use the extension, the guidance today is simple. Don't open version 2.68. Update to 2.69 first, then rotate to fresh wallets and revoke approvals as needed. Source: CoinLive. Story 2. A notable signal from Russia's traditional banking sector. Sberbank, the country's largest lender, says it's exploring ruble loans collateralized by digital assets, working with regulators on custody, margin triggers, and liquidation rails. Collateral types range from highly liquid crypto like Bitcoin and Ether to tokenized assets, with plans to lock collateral in smart contracts to automate risk management. The initiative would start with a controlled pilot, pending rulemaking that Russia aims to finalize into 2026. It's early, but it's another data point in the broader shift of banks treating crypto as funding collateral rather than just a trading instrument. Source: Coin Edition. Number 3. Markets. Bitcoin is doing very little, which in a holiday week is a feature, not a bug. Price hovers near $89,000, with traders citing thin liquidity and a still cautious risk tone. Analysts point to a familiar range, about 88,000 to 92,000, until fresh catalysts arrive. If you're watching levels, many mention 86,000 to 7,000 as the nearby support band, with resistance stacked just above 90,000. Ether is camped below 3,000, and bulls want a clean reclaim of that area to open a move toward 3,150 to 3,300. Source: The Economic Times. One more beat for the tape. ETF flow prints heading into the holiday were soft again. The last full U.S. session before Christmas showed roughly $175 million in net outflows across spot Bitcoin ETFs, led by redemptions at BlackRock's IBIT. Ether products flipped negative that day as well. No fresh flow numbers yesterday due to the market holiday, so participants are watching today's print for any shift as we close the year. It's not dramatic, but steady outflows plus thin liquidity help explain why rallies keep stalling under 90,000. Source: Crypto News. Before we continue, here's a message from our sponsors.
Need elite developers fast? Elite Coders connects you with rigorously vetted senior engineers in 24 to 48 hours. Staff augmentation, dedicated teams, or full project delivery, we've got you covered. Visit elitecoders.co to get started today.
All right, let's get back to it. Fourth story, the NFT market's bruising December. CoinMarketCap's snapshot shared today by industry outlets puts total NFT market capitalization near $2.5 billion for December, the lowest of 2025. Mazi, and roughly 72% below January's $9.2 billion peak. Weekly sales have struggled to crack $70 million this month, a sign of thin secondary market turnover. Translation: price discovery slows, spreads widen, and it gets harder for casual traders to enter or exit without slippage. Even if you don't trade NFTs, this matters. NFT liquidity often correlates with appetite for higher beta crypto risk. Source: Blockchain News. And rounding out today's 5, sentiment and positioning are still cautious despite the modest bounce. Several market trackers have the crypto fear and greed index stuck in the fear zone around the high 20s, while analysts note a choppy, low-conviction tape into year-end. Practically, that means many pros are waiting for cleaner signals, either a break and hold back above 90,000 on Bitcoin, or a pullback that resets positioning with better two-way liquidity. If you're an Ether watcher, the reality is still below 3,000 until buyers can push and hold above that psychological mark. Source: Crypto News. Quick housekeeping before we recap. If you were anywhere near the Trust Wallet browser extension on desktop this week, update to 2.69. Consider moving assets to new wallets and review any recent token approvals. If friends or family self-custody, a quick safety check today could save them a lot of pain. Source: CoinLive. Recap time. Trust Wallet's Chrome extension incident is today's headline. Patch to 2.69, and watch for reimbursement details from the team. Russia's Sberbank is exploring crypto-backed lending, another sign that collateralized crypto use cases are moving from theory to pilot. Markets remain range-bound with Bitcoin near 89,000 amid thin holiday liquidity and recent ETF outflows, while the NFT market ends the year at its lows. Cautious sentiment persists into the final trading days of 2025. Eyes on flows, eyes on 90,000, and for Ether, eyes on 3,000. Source: The Block. Thanks for listening and see you tomorrow.